Welcome to the Helping Homes Find Their People podcast with the Galluzzo Team, Elena, Chris, and Cristo Galluzzo, where dreams of home meet reality. We're your go-to source for all things real estate on Long Island. Whether you're a first-time homebuyer or a seasoned investor, join us as we explore market trends, share insider tips, and dive into the stories that make every home unique. This is your journey to find the perfect place to call home. Get ready for Helping Homes Find Their People podcast with the Galluzzo Team, because your home, your dream home, is just a conversation away. We are here with John Lo Presti from Cardinal Financial. He was here with us on our first podcast, but now he's back and he's going to give us some inside information about the mortgage market and give us a quick update from what's the difference from today and last year. And I think he has very good things to say about it. But you can give us a little update on how you've been, and then we can talk about other things.
So I definitely think things are trending in the right direction, finally. We went through a very tough period last year. I think that, the four of us can say if this was, for me personally, it was the toughest year I've ever been in my 10-year career. And, we're kind of blessed for that because it was still an amazing year. I think everybody still in this room had an amazing year. So blessed that we're in an industry where we can actually say that. As far as where we were a year ago today to now, I think where we started and where we currently are, it's probably about the same. And I think the entire time in between, we've had heart attacks and we've had thrills in between because there's been a complete roller coaster through this year where we've seen rates reach 8.5%. And then 3 weeks later, drop back down to the low sixes, even high fives. And then to end the year, probably in the mid sixes, which is kind of like currently where we are right now, mid sixes, high sixes, maybe even low sevens, depending on credit score. But I think it's kind of like where we started. And I think that's the theme of what's happened over the last, 12 to 18 months. It's not so much of, they went up, they stayed that way. It was just the roller coaster of them going up, coming back down, going back up, coming back down, trying to time things the perfect way because, there's times where people closed at 8.25%. And, a month later, rates dropped down to low sixes. And it's a timeline of when they have to close. So we're trying to time everything perfectly. Again, if I had a crystal ball at the moment, I'd probably be sitting on a beach somewhere and not in this beautiful podcast room. But I say trending in the right direction just because I think the market's kind of flattened out as far as rates. Feds have talked about cutting the rates, cutting the federal funds rate, which doesn't necessarily have a direct correlation with mortgage rates, but it's that domino market effect. So hopefully that starts to bring rates down.
They meet tomorrow, right?
Meet tomorrow.
2:30.
And we have an election year coming up. So I think this is what everybody's been talking about. All of 2023. Next year is an election year. Next year is an election year.
Well, we're hoping that they go down at least one quarter, but the discussion's been that they're not going to go down.
No, I don't think so either.
In the next short term.
And I don't think really till second quarter you're going to start to see an adjustment. And, I think once that comes, again, one of the trickiest parts in this market, is you guys know better than anybody, is sellers wanting to sell their home, parting ways with a 2.5% or 3% rate, downsizing for the same payment, upgrading for a payment way too high, and hopefully with, by second quarter, third quarter, we start seeing that trend of lower rates. And, if you're in, low to mid fives, then I think it's a little easier to part ways with a 3% interest rate.
Right.
A little easier.
But, this weekend we had, 4 open houses?
Yep.
Average price about $1.4 million. Dix Hills, Comac area. We had over 35 families come to the various open houses. Yeah. So there's people out there. And we do have some inventory, thank God, that we list a lot of houses. So that's a benefit for the Galluzzos. But, there's no refis probably, very little.
Very little.
Very little, right? So we need people to start selling.
Need people to start selling. And listen, it's not like the prices have come down, right? As you guys know. I just saw something this morning in Montauk. It's going to go $100,000 over ask.
Yep.
And you guys are selling houses in Dix Hills for 1.4, 1.5. I mean, you can't beat those prices really in Dix Hills. That's the best bang for your buck. And sitting on probably half an acre, 3/4 of an acre of flat land. I mean, it's a beautiful area over there.
I was just at an open house in Hauppauge, 679 house, ranch, extended a little bit. Bedrooms were nothing too special, but still, so many people filled that open houses. Everybody in the home just discussing what they wanted to do. I'm like, oh, market's back. It's pretty interesting. When you sit down with your, the buyers and everything that are looking to get the loan, have they said anything about the interest rate, or did they have any questions?
They ask like what it is now and what I feel it's going to go to. And I usually try to give somebody a best and a worst case scenario, and I do that within 0.5%, right? And the payment won't change much. It's not drastic. It's not life changing. It's not going to crush them to buy a house. They always ask me, can I refinance? Like, yeah, absolutely. As soon as rates come down, you can refinance if it makes sense. But don't buy the house believing that within the next 6 to 12 months you can refinance. That could take 3 years.
Yeah.
Buy the house being comfortable with the payment that you're giving at the time of closing.
Yeah, like they're not gonna, don't stress that big payment and be like, oh, I can get it lower.
Yeah,
It might never happen.
Exactly. You have to bank on it.
Well, historically, these are not very high rates. I mean, in the 80s, early 90s, we were looking at rates of 18%, 16%, 14%. In 1994, we bought our house in Dix Hills at 9.25%. So
I have a quick funny story. So my friend's dad, my buddy's dad, just bought a house. He just closed last week in Florida. And we did that loan he's got a lot going on, owns a lot of different businesses. It's an investment property that he was buying this house as an investment property. So we did it. He asked me what's the easiest and the best way to do it. So I said we could do a DSCR loan, which is a debt servicing loan, where pretty much as long as we don't need any income documents, I don't need your tax returns, as long as the projected rental income that comes on the appraisal, the appraiser's fair market view of what this house can rent for, outweighs the mortgage payment by $1, you can get the loan. He was putting a pretty hefty amount down. He was putting 45% down, but still an investment property, like a 760 credit score, so pretty good credit. All the money was in one bank account, so pretty much he just submitted his bank statement, a driver's license, a couple mortgage statements that were on his credit for some personal mortgages that he has in his name, and he got a loan at 7.5%. Paid a couple points for it because it's an investment property. He said to me afterwards, "That's amazing. That's amazing."
Great loan.
And I mean, that was a really, really good loan. And then, he's putting more money down, so the rate, was definitely a little better. But I mean, he looked at it 7.5%. I'll take that all day.
Yeah, that's great.
Now, do you do home equity lines?
We don't do home equity lines. People have to do cash out refinances, but those are tricky situations too, because those have become extremely hard to get. Depository banks are the only ones that are lending on that right now. Those rates, it's prime plus 2. I think prime is 8.5% right now. So those rates alone are over 10%. So,
Gotcha.
So if somebody wanted to remodel their home, what kind of a loan would they be taking?
I mean, there's renovation loans.
Renovation loan.
I would suggest doing that. Because a home equity line of credit, they're only going to go off of what the home is worth currently. Instead of submitting plans, architectural plans, saying this is what my home is going to be, this is what it'll look like when we're finished. Can you lend me $250,000? They're going to say no, because your home is only worth this right now. But with a renovation loan, sure, it's a little bit of a higher rate, but again, you're going to end up, if you took out a line of credit, let's say a depository bank could do that. They give you a line of credit based off of the after repair value, right? What's your plan to pay off that home equity line of credit? Because it's going to be at 10% right now. It's prime plus 2. Eventually, you're going to have to refinance to consolidate both mortgages into one. So you're taking out the line of credit right now because you don't want to get rid of your 3%, where meanwhile you're only delaying the inevitable. You're going to end up refinancing that 3% anyway in a few years from now to get rid of and consolidate that first and second mortgage. So, I mean, that's what we've been telling people, because we have people that come to us all the time. They want to do renovations. Debt has been a very, unfortunate thing for homeowners recently. I mean, the cost of living has just gone through the roof. So credit card debt has gone up a lot. So we've seen people, obviously not nearly as much, but there's refis out there where people are going from a 3% rate to a 6.5% rate because it makes sense once they pay off all and consolidate all of their debt. And they know, they've been down this road before, they know that they can refinance in the future.
Right.
Now, do you have an evaluation process, like they can go to underwriting prior to closing, so that if we make an offer through your bank, through your institution, you have a program that says, hey, this is just as good as money, like a cash deal almost?
Absolutely. So that's the commitment letter, right? So most offers on a home are either have a pre-approval letter or it's a cash offer. If there happens to be a commitment letter, there's probably a 99% chance it's from Cardinal Financial. So Cardinal, because the technology that we have and the loan operating system that we built, we're able to, somebody applies for a mortgage to get pre-approved with us today. We take their application, obtain their documents, and that loan is going directly to an underwriter. And within 24 hours, it's going to be fully underwritten and approved with a commitment letter. So your buyers are going to be able to submit offers with a commitment letter, and then we also provide a pre-approval letter as well too. But it allows them to compete with all cash offers and be one step up above somebody with a pre-approval letter.
Right. Very good point.
And John just did a FHA loan for one of our buyers in West Hempstead, and they did such a good job. It was smooth sailing, and nothing really intense happened. They had control of the whole situation, and it was really good. And now we're going to go to their housewarming party.
We're going to the housewarming party. And I got to say, Krista did an amazing job too, because we haven't even talked about, they got into contract for one price, and the home happened to come in, it appraised $15,000, $20,000 higher. So
Yeah.
you got them a good deal.
Yeah.
And then you ended up, once the appraisal came in, you ended up negotiating a seller concession for them as well too.
Yep.
Where they financed pretty much all of their closing costs. I think they only came out of pocket for a down payment.
It was a really nice, good house too.
Great people too.
Oh yeah, they're awesome. We're gonna definitely have a good time at their
Yep.
housewarming party. They're really funny. They're Aaron Brody's friends. Really funny.
That says a lot.
Yes, exactly.
The Brodies are one of our best friends and
That's
a fun
great.
family.
That's
Yeah.
great.
But yeah, and are there any new regulations or changes in the lending process for that borrowers really would need to know about before they even come to you?
There's been some. I mean, I think one important one is if you're using, well, first of all, I mean, you're now able to put 5% down on a 1, 2, 3, or 4 family home with Fannie Mae, where previously, if you're buying a 2-family home on a conventional loan, it's a minimum of 15% down, and then a 3 or 4 family home is 20 and 25% down. Fannie Mae has changed those regulations, and they're allowing you to buy a 1 to 4 family home as a primary home with just 5% down. And it allows Fannie Mae to compete with the FHA, who allows 3.5% down on 1 to 4 family homes. FHA, though, in this circumstance, it could be better to go with a Fannie Mae conventional loan, because on a 3 or 4 family home FHA, there's a self-sufficiency rule where even though the buyer is going to be living in 1 unit and renting out the other 3 units, let's say if it's a 4 family, FHA requires that all 4 units, if rented out, 75% would have to cover the mortgage payment. Right now, that's extremely, extremely hard to do.
Sure.
It's virtually impossible.
Yeah.
Conventional, you do not have to do that. So Fannie Mae passing that this year, when rates go up like that, the agencies do come out with new products to try to make it more creative lending for consumers, because they want houses to sell. They want to sell houses. They want to buy loans and securitize loans in the secondary market. And then on top of that too is the non-QM, as I was telling you guys out a little earlier about my friend's father buying a home down in Florida, truly an investment property. and he took advantage of this program where he's not submitting 15 different tax returns for 15 different businesses, getting 15 different profit and losses, 15 different balance sheets, going through. He wouldn't even know where to start if I
Yeah.
gave him that list. He wouldn't be able to put everything together. And he took advantage of this program, and he's looking at it. And when you told me that your starting rate when you and Elena bought the house was 9%, he's looking at 7.5%. It's amazing,
It's fantastic.
fantastic.
Mhm.
And he knows eventually when rates come down, if he wants to, he could refinance again.
That's it. Now we got to start finding some properties for us to buy.
Yes, that's our next.
I mean, 5%, that's kind of insane. From 15 to 5, that gives everyone access to so many different properties now that they wouldn't really have had in the past. But now we just need to find those properties, legal 2-family, or even more.
Yeah.
It's so hard to find on Long Island itself.
It's
You're getting pushed into Queens and Brooklyn more, and Nassau as well, to find those properties.
Right.
Suffolk County is like a whole nother game.
all right.
If it comes
they-
on the market, it goes so quick.
I was going to ask,
so
do
fast.
they really even exist in Suffolk County?
There
They
is
do.
Patchogue,
Patchogue.
Bayshore,
Huntington.
Huntington.
Huntington, yeah.
So it's crazy that we had a 2-family, legal 2-family in town of Babylon, right near Town Hall. We were selling it 5 years ago for $475,000. It was in good condition. The same house down the block just sold for $950,000.
I was going to say 875.
Unbelievable change.
It's crazy.
It's really crazy.
Now, do you guys see that changing at all? Like the market coming back at all, where like those prices are going to drop back down? I personally don't.
Right now we're at the new normal.
Yeah, I
You
agree.
know, Elena, what did we just sell? We just sold a house in Village Hill Drive in Dix Hills for over $1.5 million, right?
Yep.
And what are you thinking about pricing?
I mean, I feel like it's going to stay as high as it is now. I don't think it's going down. I don't think it'll go up any further, but I think like you said, it's the new normal. We finally come to what it should have been for years, and now we're there. And now I think it's steady. It'll
Right.
hold its own.
Well, because points in Suffolk, Western Suffolk, in our opinion, was underpriced. It was undervalued
Yes.
compared to like Syosset and Massapequa and North Nassau, Eastern Nassau. So I think that now Western Suffolk is catching up to Nassau.
Yeah,
And our taxes are lower in the Western
point.
Suffolk compared to Nassau.
There's
So
more
the
property.
there's
more
more
property.
property.
So they're starting to see that, and we're getting a lot of Queens buyers, Brooklyn buyers, Manhattan buyers. They're all seeing they want some property. They think the taxes are fair. The school districts are all
Not
nice.
too far out.
It's not too far out of the law.
Still a good train.
Yeah, I feel like that
Right.
Close
trend.
to the highways.
Yeah, trend's been going on for like the past 3 years for
Yeah.
sure. Yeah. I mean, who doesn't want a full acre lot and be able to actually do whatever you really want to do once you get the permits done, and you can have a beautiful big patio overlooking your pool
Yeah.
and get a balcony from your master bedroom, and
But
it's
don't
just,
forget, tennis court or pickleball
oh yeah,
court for
pickleball
John.
court,
Tennis, not pickleball.
tennis.
Eventually, you're going to be a pickleball player.
Converted.
Now they have we have this listing at 15 Carmen Road in Dix Hills, and right at the park right down the block, all the tennis courts are now pickleball courts. No one
sad.
uses it for tennis anymore.
That's sad, I know.
It is interesting how the whole transfer is happening.
It's
We got a famous tennis player over here.
yes. But pickleball spread like wildfire. I
Because
will say
pickleball
that.
is kinder with age groups. Anybody can really play pickleball. Not everybody
Exactly.
can play tennis.
And you can go out no matter what experience you have with
Right.
racket sports.
Right.
Go out, play pickleball a couple times, and get pretty good at it. It's gotten very popular. But they've made so many of these like racket sports. Anything with a racket and a ball, they've made into like a sport. I saw one in a glass cage called padel.
Is it so? I was in Grand Central Station, and they had a squash,
A squash
Tournament.
tournament.
Squash.
Yeah.
and I was
Every
like,
year.
"What is this?" And then it was huge production. They had
Yeah.
even a stage in
I bet.
Grand Central Station. I'm like,
I've
"What is
been to that.
happening?" Yeah, right down the block from Roosevelt Hotel, and you make it left. It's a huge event. I'm like, "What's happening here?" Right in the middle of this beautiful station, and they're just hitting this ball. as hard as they can at this glass.
And you have no idea what's going
Yeah,
on.
you're like, what's happening? It's so weird. Who's winning? What's the point?
Squash has a lot of rules.
Yeah.
Does
A
it?
lot more rules than other games.
Than
There's a
racquetball?
height requirement on the wall. You can't hit it below. You can't hit your racket on a certain level. You'll have to have it at a certain angle. If it goes below that angle, it might be a foul. You get a point. It's just very convoluted squash. It's not an easy game.
No.
Once you're good at it, it's exciting.
Yeah, I was like, oh, they're selling tennis rackets, but that was definitely not tennis rackets. It was interesting.
Do you guys think that if the rates do drop down, let's say to the high fours, low fives, and that's enough for a seller that again didn't want to part with 3% rate to go to a 7% rate, and now we'll see more supply?
I think there'd be a frenzy if it went down to 4.
For
It'd be
sure.
be a
We'd
frenzy
get all those young buyers back,
and a lot more sellers. Do you think too?
and the sellers
Yeah,
might
totally.
jump ship finally.
There's no might. If it goes to 4, which it's not.
Yeah.
It's
It's
Then
not
you'll
going in
see
the
it.
next 3 years, I don't think. But if it does, all these baby boomers
Yeah.
that are locked at 3.5, and also we have to remember, here's a very important thing. There's balloon mortgages. There's arms coming due. So let's say they did an arm, a 5-year arm, 7-year arm, 10-year arm. They're all coming due. Where are they going to be? 8%, 7.5%, 7%, because that's what the bank's going to end up with, right?
Yeah.
So those are all going to be coming due. That's the next section of the market. Not going down to 4%. I don't see that happening. Maybe 5.5%. And that'll still be good.
Where do you think the market needs to be to have more sellers come out?
I
and
think
be
5.5 would be a good
I
number.
agree, yeah.
And anything below that is just cake.
Yeah.
But I don't see any other way besides the arms coming due and the rates going to 5.5. I mean, we're fortunate. We've been meeting a lot of people that are transferring down to Florida, or a lot of our people are upgrading.
Yeah, upgrading or even only a few sector or downsizing because they don't want stairs or something. It really comes down to their living lifestyle, and then if they have the income to really transfer and not really get hit so hard and have to rely on rates as much. But
Well,
that's only a few in between.
We always say we love diamonds, engagements, because they're going to get married. They need a bigger house, or they were living in an apartment in Queens, Brooklyn, or Manhattan, so they need a house, right? We like diapers. We like children, so we just sold a house in Northport, and they were having a baby, so they were excited. They want a bigger house, right? Divorce,
I was just about to say then divorce.
right? Divorce, big. That's
you forgot diploma.
well, I didn't forget it.
No.
I'm getting to it. Diploma, that's very big. So all these real informational things that we rely on, we've been fortunate that the Galluzzo family have been getting that. We've been fortunate, but can't rely on that all the time.
But if the rates go under 5.5%, have a couple of doors I'm knocking on for sure because they'd be ready. They already one door. I remember one guy came out. He's like, if it comes down a little bit, but I have a 2.5% interest rate, there's no way I'm leaving right now. So, he's like, that guy's right down the block from Briar Root when we sold that house in Smithtown, and we just got to do the rounds again, see what they say. If it comes down a little bit, we'll see what their comments are, and we'll make sure that take note.
Do you see? I know you said prices have normalized and the new norm. Do you think that with much more supply, because the rates have come down and sellers are willing to sell more, buyers, I still think we all agree there's going to be a ton of demand because rates have come down and maybe it's more affordable for the people that couldn't afford it while the rates were higher. Do you see prices maybe coming down a tiny bit, 5%, maybe 10%, because buyers have more to choose from because there's more supply on the market?
So short term, no. Again, there's just so many buyers.
Yeah.
And they'll come into the market too. So there'll be a flood of buyers if that happens.
Oh, yeah.
So there'll be, because a lot of the buyers we have are even sitting on the sideline right now. They're like, oh, we're going to wait to see if the market cools off
Right.
and if the rates come down. It's not happening short term.
No.
So they're waiting. Some of them are living in their parents' basements. They're living in apartments. They're living just temporary housing. until they can read the market, until they can figure this out. But for January, I mean, you had the best month you've had ever,
Ever. Yeah.
right? In
Yeah.
January.
In January.
And that's never been.
No, it's never been. So we're going to finish, my group is going to finish at 26.2 million for January with 47 closings. And, you know, in the height of the market, during 20 and 21 and most of 22 also, we were doing about 22, 23 million. That was our average, but we were closing about 50 to 55 loans a month. And
But my question is, in January, did you ever have that month?
no,
Never.
No, never.
Right? Your biggest months were what?
April
May,
through August, September.
June, July,
Yep.
August. So to have it happen in January just says that there's overabundance of buyers.
Yep.
And they're looking for property. So our job, you know, and the great part that we're doing now is we're giving free market evaluations out a lot. So we're giving them to old clients. We're giving them to people in neighborhoods and communities. So if anybody wants to get a free market analysis of their home, we'd love to give it. And it's always free. Just reach out to our family and we'll get it to you.
I feel like the buyer is just so much more intelligent these days, and they want to buy homes because that they see that there's value there. So I feel like the buyers themselves have changed, and they're finding they want to be in the game.
I
They want
totally
to be
agree.
in the game, especially your age, younger
Yeah.
generation.
Well, it gives us more
Want to
security.
buy homes.
Yeah, it gives us more security. We don't have to rely on a landlord, let's say, if we're renting, and then have a bickering back and forth. Oh, this lease doesn't have this in it, but you're telling me I have to do this. You know, like the security and kind of ownership is totally different. It's so important, especially if you have a family, you're growing a family. It's totally different when you're living in the suburbs, let's say, and you're in Manhattan, Brooklyn, Queens. You can rent and have a good life and still rent, or even have rent stabilized apartment, which would be fantastic. But yeah, totally comes down to ownership and security and being able to do what you really want with your property, and ownership is a fantastic thing.
Yeah. And get in the game, you know?
Getting in the
Yeah.
game.
Get in the game, buy a
Yeah.
house, buy a starter house,
Yeah,
because you're going to end up building equity for yourself, you know? And like, I bought my house, my wife and I bought our house 2016. And if you were to told me in 2016 what it would be worth today, I would have never believed anybody. So, I mean, where we are, we're all very fortunate where we live, where we grew up, that, you know, we're in a very nice area, and in an appreciating area.
Yep.
And the investors are out there too. They're making money on the flipping the homes, because a lot of the young couples do not have the wherewithal to do that, or the time. Got double income families. So the investors are taking advantage. They're buying these homes, they're making them beautiful, and they're selling them for a nice profit.
Yeah.
And they're also helping the next generation buy something new, like my parents did. You know, we're living in the houses that my parents and his parents bought, but they were brand new.
Yeah.
You know, we forget, we're like, oh, these old houses, but they were brand new houses when my parents moved out from Brooklyn onto Long Island, and everything was shiny and sparkly.
Right.
Dirt roads, though.
Yeah.
There were dirt roads.
There was a lot of deer.
So getting a
50,000.
lot of,
Potato fields. Deer
Yeah.
Park. Everything was potato fields. We had potatoes everywhere out here.
Yeah.
And in where we live in Dix Hills, there was actually blueberry and strawberry farm
Well,
that are now a housing development. And where I used to ride my horses, I used to have quarter horses, palominos, and different kind of horses. Western riding in Dix Hills was 10 acres. Gorgeous flat land. It wasn't the best barn in the world. It was like really crappy, but beautiful land. And now that's 6
Developed.
houses.
yeah.
It's a sad state that they're tearing down all these horse stables. Look at the ones in Woodbury, right? Woodbury. And they're taking them down off Round Swamp Road and on Jericho Turnpike.
They
in
just
Woodbury.
built condos, right?
Condos,
Yeah.
all those condos, and now they're building houses in the old farm off Northern State Parkway.
Yep.
It's sad,
Yeah.
you know, but that's the way it is.
They should make one sectioned horse only path all the way from North Shore to
We
South
need
Shore.
a Central Park
I
on
need
Long
that.
Island.
Yeah, we do. The new Prospect Park coming to
We
Long
need
Island.
Central Park somewhere.
Well, in Dix Hills Park, there is riding trails.
Yeah.
There's just no more horses.
There's nowhere to
The
keep
last
the horses.
horse stable in Village on the Hill section, it was that big blue house right on Village Hill Drive. And then they don't even have horses. They just have the horse stable.
They shipped the horses
Yeah.
to Florida. Their daughter moved, and they're down in Florida now.
Yeah.
But there is still a barn in the neighborhood by Dix Hills Park. They have 6 horses, and they actually lease the horses. So you get like a quarter lease on a horse, and then you can go riding in Dix Hills Park. Those are the only horses I know very close to the park. Very 6 of them, I think.
I'll do that. Come on. Good horseback riding. If you know how to ride, that's the best time ever, you know?
Let's do it.
I'll stay home.
I'm with you, Elena.
You ride. You rode before, right?
I've rode on a horse, but I don't know how to ride.
Yeah, it's a big difference. I'm not riding any longer, but when I was younger, I was riding in rodeos. I was doing
Really?
gymkhana barrel racing, but there's no way I'm going to do anything now. I'm good. I like being on the ground. I'm through.
I just got the beach permit to go ride on the beach with drive on the beach at Gilgo, Democrat Point, and all that stuff. I just can't wait for the summer now because we're just gonna ride up. Everyone's gonna have their trucks, go surfing. We didn't get the fishing permit, but you can go on the other side if you get the fishing permit and go fish there. But I'm excited to just utilize the South Shore and then utilize the North Shore and just go sailing over there. It's gonna be good. A good summer next year. Well, this year.
Christopher bought a sailboat without telling his parents.
Yeah, it was a nerve-wracking decision,
Good for you. That's
but it was
cool.
fun. It was a good decision.
How come a sailboat?
Well, my friend had a sailboat, and his dad had a 33-foot sailboat, and he said, I don't want the sailboat anymore. Do you want it? Gave it to him. He already had a 22-foot sailboat, so he sold it to me, and it was 22 foot. It didn't look so scary, so I was like, all right, I'll do that. I don't know how to sail yet, so we're gonna figure out how that's gonna work out.
Okay.
It's a floating sailboat
It's
with an engine.
It's a really nice Catalina 22-foot sailboat, and I just got the rudder, so I had to go find. Actually, we get Sales Montauk. It's called Sales Montauk, correct? She has about 42 Catalinas, and in Montauk, and she ended up having a bunch of things. If I need anything for the Catalina, she's the person to talk to because she has so many things in inventory that are like particulars. She had a rudder for me, so I got a rudder finally after looking all over the internet, and they're so expensive. She gave us a really nice deal, and now I can actually steer the sailboat. But I got a little Mercury 5 outboard motor for it to be able to like take it around Sands Point and things like that. But yeah, now we're gonna finally sail. I gotta take lessons first, though, but it's gonna be a good time.
Are you a boater?
I'm not a boater.
You're just tennis,
Tennis,
golf?
golf. Yep, I like golf. My business partner is actually a big boater. You should talk
Oh, yeah?
to Michael.
Yeah,
Yeah.
definitely.
Is he a sailboat?
He grew up on the water, so I'm sure he knows how to.
Sailing is different,
It's
but
much different. That's why I asked why a sailboat.
Yeah,
But he grew up on the water, so I'm sure he knows how to drive a sailboat.
yeah. It's gonna be interesting, but I think I got the hang of it.
Yeah.
So the funny story is, my friend gave me a boat that was broken too. That's why he's like take it for a very good price. But he gave me the whole like front of the boat all cracked because during a storm he found the boat on someone's beach, like in Huntington or something like that. So he had to get it towed back to Britannia, and I had to fix. I don't know how to fix boats, but I had to literally fix and fiberglass the whole front right of the boat, and it was nerve-wracking because the epoxy started smoking and the whole thing started melting in my hand. I'm like, oh my goodness!
This is
So
in your garage.
this was actually
In the water, I
and-
think.
No, this wasn't in the water. It was when it was docked out. But oh man, it was so nerve-wracking. It was my first time, but now I know how to do it very quick, and I can epoxy it. I got way better at it. I actually fixed all your paddle boards out in Montauk now. You know,
Yep.
when you really jump out there, you learn something new, and you can
You're
fix
always
things.
learning something.
It's
new.
like
You're
sink or swim.
Yeah,
You
sink
go
or swim,
sink or
literally.
swim.
Literally.
And
Yeah.
my friend who used to work at Britannia told me, he's like, "You got bottom paint?" I'm like, "What the hell is bottom paint?" He's like, "You have to paint the bottom before you put it in the water." It's,
It keeps the barnacles off the
yeah,
bottom of the
I was
boat.
like, "Oh my god, I'm really way too novice for this."
That's amazing.
I'm
I actually
excited.
drove my friend's business partner's boat from his house, his canal, to Fire Island.
Oh,
So I
that's
did
fun.
pretty good.
That's fun.
That's a far ride.
It was a far ride, and I parked it and docked
Oh,
it.
okay.
Yeah.
Nice.
That's
he's not
the,
a boater.
That's the nerve.
He
part.
parked it.
Where'd
Yeah,
you
he
I
parks
did.
it.
What,
And he
what do you call
drives
it?
a sailboat.
Dock it,
You
right?
docked it,
You're
yeah.
like, he could drive the sailboat.
Did you dock it at like Ocean Beach or something?
We didn't go to Ocean Beach. I think we went to Kismet, but
Yeah.
still, like, you know,
Not
something
easy.
like
Yeah,
this.
it's
and
still
all the
not
boats
easy.
were in there.
No.
Yeah, it's very nerve.
Any docking.
And he made me do everything.
Yeah,
He
yeah.
just sat there, and
He-
driving in the water is fine. Just
He trusts you.
Yeah, I'm
he
sure if
trusts
he,
me a lot.
I'm sure if there was a one moment of no trust, he would
Oh,
have.
Taking over.
Did you tell
he-
Dad he has to bring your?
Yeah, you're gonna have to help me on March 25th. So good luck.
He wants you to move his boat.
Okay,
Yeah.
that's fine.
You could probably get your
You
friend to
gotta,
help you.
you gotta bring it to the moor.
The one who actually sails, but you don't have to sail it. It's just a little
It's the outboard motor you'd use.
We'll handle it.
Yeah,
I think I
Something.
can handle it.
something's gonna.
Worst
go
case, I get out, I swim and push it.
Do you even
Oh, yeah.
have sails? Actual sails?
Yeah, I do. I just gotta repair them a little bit.
Oh, okay.
Yeah, so the whole thing.
It's gotta
You're
keep
YouTubing,
repairing.
right?
I mean, oh my god, a YouTube.
Yeah.
Everything.
YouTube is the greatest thing ever.
But I did call my friends and they knew where to like go with it. So like, oh,
Yeah.
just go to the marine store, get this, this, and this, and I'm like, okay, get everything together. They just weren't there to actually guide me. So then YouTube helped me do that. Yeah,
YouTube is one of the greatest features,
All right, I
tools ever.
fixed my washing machine. I
Yep.
fixed my dishwasher. I fixed like all these random
Learn
things.
how to
and
play the piano.
yeah, you learn how to play the piano from YouTube.
That's actually pretty impressive.
yeah.
That's pretty good.
Yeah. Just they usually when you start off at YouTube, they're like, just learn your scales and then go from there. I'm like, okay.
Well, that must be how John learned how to play tennis.
Yeah.
YouTube.
YouTube.
YouTube. You
All right.
you
Was
can learn
YouTube
anything on
It only
was
took him a
YouTube a
month.
thing?
Yeah, and then I got surgery. I watched
Yeah, yeah,
I
yeah.
watched the wrong video.
It was badminton.
Squash.
Yeah.
Ran into one of the walls.
That's why they call it squash.
You can get it like a bug.
All right, cool. We have to end it here because we do have
Yes.
4:10, so we do
We're
have
hoping to get a listing in
a
Deer
listing
Park.
right now.
Good.
We need
Okay.
to go.
All right. But thank you, John, for coming to our podcast and being a part of this.
Thank you for
Every
this
time.
beautiful
Yeah, thank you
studio.
for
No
allowing
problem. My
So-
pleasure. Thanks for having me, guys.
everybody hit up John Lo Presti at Cardinal Financial for all your loan services. And if you have any questions regarding mortgages or anything like that, give him a call. He will be able to help you and guide you all the way. Thank you for joining us on another insightful episode of Helping Homes Find Their People with the Galluzzo Team. We hope you gain valuable insights into the world of real estate and mortgage. If you have any questions, want to share your story, or suggest topics for future episodes, feel free to reach out. We love hearing from our listeners. Don't forget to subscribe to the podcast for more expert interviews, market trends, and tips to make your real estate journey a success. As you embark on your quest for the perfect home, remember, we're here to guide you every step of the way. Stay tuned for our next episode, and until then, happy house hunting.